Hello everyone and welcome to today's daily report market videos on Thursday the 6th of June with me, Richard Perry, market analyst at Hantec. There's a fairly steady sentiment that has developed on markets today. We've got the ECB meeting which comes out this afternoon, and there's the correction that we've seen in the dollar has just stabilised a bit. There was a big intraday rebound actually on the dollar yesterday afternoon on the back of the ISM non-manufacturing positive surprise, which helped to pull the dollar back higher. We also saw Treasury yields finding a basis of support in recent days. They've started to stabilise, and that's helped the dollar as well. But the big focus for markets today is going to be this ECB meeting and the various measures the ECB could do to try and mitigate this sort of slowdown that we've seen developing, or the expectation of a slowdown developing, certainly on growth and inflation numbers. We've got the prospect of an Italian debt crisis as well, still on the back burner, which is starting to come to the fore. And I think that what the ECB is going to do is announce the details of the TLTRO program that it started talking about back in March, that kicks off in September, and they're likely to lay out the details of that program today and how what the deep discount of rates it's going to give to these banks is going to be a driving factor, I think, in terms of how the market looks at this ECB meeting. Now, we've also got the reassessment of economic forecasts, whether it downgrades economic growth forecasts, whether it downgrades inflation forecasts will also be assessed. And also, in recent months there has been talk of a tiering of the deposit rate, but I don't expect that to come through with any real detail. Certain members of the ECB Governing Council have been sort of talking down those prospects in recent weeks, so I think that that's going to be again put on the back burner. But I think the TLTRO program is likely to get some details today, and we could see a little bit of a possible downward revision to inflation, maybe growth as well, but likely to be the main focus on the TLTROs today. So we've got that this afternoon. Now, in terms of other data points, we've got the US trade balance at 130 and also the weekly jobless claims. Now, the US trade balance is expected to just deteriorate slightly, just to a widening deficit very slightly to minus $50.7 billion on the month of April. Jobless claims staying at 215,000 today. So that takes me to my chart of the day, which is the dollar Swiss. Now, what we have seen across Forex majors is the US dollar starting to engage in a bit of a rebound. We saw that sharp move to the downside on the back of very disappointing ADP employment change number yesterday, 27,000. That was way down from the 173,000 expected. Initially, the dollar sold off, but then rebounded on the back of the ISM data, the ISM non-manufacturing data, which was the positive surprise. So it's a big unwinding move, and we've seen that through dollar Swissy. Big positive bull candle coming through. Now, is this the start of a rebound? Well, 99 big figure has been a basis of floor for several months really, and again effectively it's held that into the close and rebounded. We've seen momentum indicators, RSI, picking up from 30. 30 is a consistent pickup point, often seen, sorry about actually, let me just reset that. Often seen where 30 is a turning point, certainly through 2017. A couple of dips below 30, but generally speaking low 30s is a point at which the RSI tends to pick up again on dollar Swissy. Now, the fact is that we've also seen a little bit of an uptick on the stochastics, and the MACD lines are starting to bottom out, although they are still falling. And it's interesting that if we do start to see the move back through 99.50, which has been a basis of resistance in recent days, if that market starts to move through that and close above 99.50, then we could see a move back towards parity. Now, let me show you here on the hourly chart where 99.50 has been a near-term pivot in the last 3 sessions. Breakout above that effectively completes a small base pattern, and you could imply a target of 100 100 pips back of recovery. That's back towards at least, obviously, that level of parity, which again is a level of resistance from the 3rd of June. But 100 pips of recovery is obviously 1 spot 0050 as an implied target area. So there is the prospect of a rebound now coming through on dollar Swissy, and a positive candle today would help to build that, certainly if you saw a close above 99.50, as I said. So we're looking out, this is something to keep an eye on. Nothing yet confirmed, but yesterday's bull candle certainly does suggest that the dollar is possibly on the brink of a turning point on a near-term basis, and it'll be interesting to see, because obviously the RSI in recent weeks has been coming up to the 50 area, and that is currently at 33, so a near-term turnaround could easily have some upside potential for a rebound. So with that in mind, I wish you good luck in your trading today, and I'll speak to you later.